3 minutes.
And I thank the chair. And I rise in opposition to the bill for a number of substantive reasons, but also, quite honestly, after hearing the comment from the gentleman from California, I also was about to say I rise with concerns as to the process as well. Appreciate the ranking member's comment as far as potentially moving forward on this. I, too, have been there in the past where we do things in committee, and the relative committees that I serve on Financial Services Committee, and have agreements with the other side of the aisle and with the chairman, specifically Financial Services, with Chairman Frank, and then things go to the Rules Committee, and I don't know whether it was a bipartisan obstacle in this case, but be it as it may, problems happen with the Rules Committee, and I can tell you, in my working with Chairman Frank, he was able to actually get things done then on the floor as far as the substantive amendments done here to get it done. So I hope that we see similar action with regard to this as well that we've seen in other committees. But I do rise in opposition or concern about this bill with regard to the repeal of the McCarran-Ferguson aspect, and I do so for 3 points. One has been touched upon, but I want to go into a little bit more detail. With regard to the CBO, the CBO, Congressional Budget Office, nonpartisan entity, has noted that states already have the laws on the books to prevent what we're really trying to deal with here, price fixing and bid rigging and et cetera. And furthermore, states' insurance commissioners already typically review the rates charged by insurance companies. So what does this basically mean in a nutshell? States that basically the states are working in this direction already, and that the passage of this legislation will have a minimal positive impact. And just a side note, when we talk about state insurance regulation in general, you have to remember, when we're talking about the financial situation that we're in right now, it was not the faults of the state regulators of the financial marketplaces that brought us to where we are. It's to default largely to errors and omissions in the federal regulators. So we're trying to cast blame or aspersion on any regulators out there. It should not be on the state regulators, because in essence they have done their jobs, and we should not be throwing other impediments to that getting done. Second point, someone already mentioned about a report out of the CBO. Let me go into a little bit more specifics of what the CBO said with regard to cost. CBO says, and I quote, "To the extent that insurers would become subject to additional litigation, their costs and thus their premiums might increase." Let me repeat that. Their premiums might increase. So to all the point of the other side of the aisle saying that we're doing this with the good intention of trying to get premiums to come down, what do the experts, what do the nonpartisan CBO says? Just the opposite. Premiums might go up. So the conclusion there is, so here's a case where increased litigation costs would actually drive up the cost of insurance and not bring it down. Third and the final point, touched upon a little bit, let me go into more detail. This legislation could have the effect of shutting out new entrants, not folks who are already there, but shutting out new entrants into the marketplace. The other side of the aisle, can I have another?
The gentleman's time has expired.
Madam Speaker, I yield the gentleman 2 additional minutes.
The gentleman's recognized for 2 additional minutes.
Thank you. This legislation can have the effect of shutting out new entrants into the marketplace. The other side of the aisle has already talked about the fact that they want to have greater competition in this area of health insurance, and I'm assuming health insurance across the board. But what will this do, as Jim and others have already said on the floor, that what it will do is basically say to the new entrants, the small companies who want to get into this marketplace to be able to compete against the large entrenched companies that are already there, you're pushed out, you're locked out. So is that what we want to do with this legislation? That'll be the impact. Let me conclude then. In a letter to Speaker Pelosi, the National Association of State Insurance Commissioners says the following: "The business of insurance, while exempted from federal antitrust law, is still subject to state antitrust enforcement actions." It's important. In fact, even if the McCarran-Ferguson antitrust exemptions were repealed, the state actions doctrine exempting them would continue to apply. The most likely result of this repeal would therefore not be increased competition, but a series of lawsuits testing the limits of the state action doctrine, with associated litigation costs being passed along to the consumers in the form of higher premiums. The conclusion, Chair, is more litigation, more harmful consolidation, and more increase to the cost of the consumer. All things that we should be working opposed, and that is why I do not support the underlying legislation. And with that, I yield back.
Gentleman yields back. The gentleman from Michigan.
Madam Speaker, no one's worked harder on this measure that is not a member of Judiciary Committee than Peter.